Hey, how's it going, guys? Thank you for joining me on this week's episode of The Real Deal. Yes, that's a new shirt, the new logo. I still have the other logo that I use, but now I have two options when I'm doing marketing material or when I'm giving hats to my clients, even. So I think this is a really cool video. Sometimes, whenever I'm in the process of helping clients purchase homes, I actually reuse these videos and I send them some of this content. So this is a very topical one right now that I kind of wanted to go over. And it's going to be basically on some of the benefits and downsides of either one of these financing options. There is a third option that's VA, which is a great loan. If you're VA, that's usually the route you're going to go. But we're going to go ahead and just talk about pretty much the majority, 80% of the clientele that I deal with. That's your typical FHA or conventional financing. So what is the difference between these two? Originally, a couple years ago, conventional was usually only reserved if you had 20% down. So conventional financing was a much harder loan to obtain, and it is a harder loan to obtain, but it's gotten easier because now they even have 3, 5, 10, 15% down payment options for conventional financing. Back in the day, FHA was the only option without putting 20% down, which was 3.5%. But a lot of things have changed the last couple of years. There's a lot more investors for both options, or for conventional financing. So now conventional is used more frequently, especially for first-time home buyers. And there are some benefits that I'll go over, and then some downsides. But we're also going to be more importantly talking about the role or the vital role these two different types of financing options play on your monthly payment, and also when it comes to your offer getting accepted. So conventional financing, this is going to be a good option if you're at premium credit 700 plus, 730, 750. And even then, you could have premium credit, but it might still not be a good option for you for a lot of different reasons. It could be your debt to income ratio is too close to the numbers. When that ends up happening, when you don't have all the right sauce, conventional financing ends up penalizing you for your interest rate, and you end up getting penalized with the private mortgage insurance. On the flip side, FHA, for the most part, if you're hovering around a 640 credit score, you're going to have really good rates. Interest rates are going to be good, and the private mortgage insurance is set. That does not vary based off of your interest rate, or excuse me, your credit score. So FHA, for the most part, for first-time home buyers, if you have modest credit, and modest credit is anywhere between like a 650, 660, high 600s, FHA is going to be the better option for you when it comes to affordability. So I'm going to go ahead and share my screen with you guys to show you what I mean, and we'll compare the two options, okay? So I have this payment set up right now with a FHA home, $300,000. The minimum down payment on that is 3.5%, which would be $10,500, okay? And I'm accounting for an interest rate of 3.5 right now. That is the interest rate used in FHA down payment assistance. So I'm just using that interest rate because I know that's set in stone right now. That gives you the monthly payment that you would expect to pay on a $300,000 house. Let's say that you have a 640 to 660, 680 credit score. This is the route you're going to want to go with when it comes to your monthly affordability. Let's say you're in that same credit range and you decided to go for conventional. I have a very similar situation right now where a client considered that as an option, and I'll explain why they wanted to go that route. Credit score was good, 680. However, the interest rate was higher. So the interest rate for down payment assistance was 4.25. And then on top of that, the PMI rate was all the way up to like 1.35. So for the same house, she was going to be paying about an extra $240 because of the different type of financing. And that's where conventional really just doesn't end up being a good option when it comes to your monthly affordability, because that same house is just going to cost an extra $250 a month for really no reason. Honestly, it's just the different guidelines that conventional financing has. There are some benefits for conventional financing. You don't have to refinance to get rid of this PMI that you guys saw me adjust. And then there is benefits if you have premium credit, high 700s, mid 700s, because sometimes the rate will actually be lower on the PMI. Instead of being the standard 0.85 that FHA requires, maybe you get like a 0.65, which is going to help your monthly payment as opposed to affecting it. Interest rate, for the most part, though, conventional is always going to be a little bit higher than FHA, right? But sometimes because of the lower PMI rate, private mortgage insurance rate, then it'll kind of average itself out. Now, traditionally, when it comes to conventional financing versus FHA, let's talk about how that plays a factor in your offer. Okay. So I just kind of give you a really brief description. Obviously, that's a lot of numbers I threw at you. You might have to hit that rewind button a couple times to get that. But at the end of the day, traditionally speaking, conventional seems to be the financing option that seems to be a little bit more lenient when it comes to appraisals and requests for repairs. Because of this reason, a lot of times listing agents will hold out for a conventional type offer. FHA will sometimes be a little bit more stingy when it comes to their appraisal, and they might appraise homes less than their conventional counterpart. So FHA is a great option. It's very enticing because you get a great monthly payment, you get a great interest rate. Your PMI is pretty much set. It doesn't change based off of your interest rate. However, in this market or any market where there's multiple offers on a house, because really there could be multiple offers on a house regardless of the market if it shows well and it's priced well, okay? But for the most part, agents will try to hold out for that conventional offer. I'll give you guys an example. I have a client that's shopping and she's in the price point about $280,000. We saw a house, she loved it. She put a really good offer, and I mean, I'm talking like a solid offer. Like I did everything I could. You know, we went above list price, no closing costs, and some other techniques, some other tactics that I used to try to get my offer accepted. I texted the agent, I asked for an update. Said, hey, I'm just trying to find out where we at with this offer. And she tells me, oh, I sent all the offers to the seller. Your offer was apples to apples to another offer, but they went with it. So at that point, I knew that she had this other buyer match the terms of my client's offer. She basically used my solid offer and just had this other buyer match it to our terms, which upsets me. But there's really nothing we can do about it. It's free game. And that's exactly what it was. I asked her for further clarification. I wanted to know, it's like, made a great offer. Like, what happened? Where are we? Where's the disconnect? She said the other one was just conventional financing. So she said that everything was apples to apples. That means that we came with a great offer. We came with the fire, but she gave this other buyer the opportunity to match it because it was going to increase, the seller's likelihood of accepting it. So that sucks. And I had that conversation with my buyer. I told her, I said, hey, we have the option to go conventional, but at this price point, this is going to be about an extra $240 a month. Are you okay doing that? And she wasn't, and understandably so. For an extra $240 a month, at that point, we can increase our purchase price $50,000 for the same exact monthly payment. So what I would like to take away from this, the biggest takeaway that I would say is, when you talk to me, when we get together, when we meet, we have our consultation, I'm always going to give you the best option when it comes to monthly affordability, because to me, that's what matters. I want to make sure that when you're purchasing a house, you're comfortable with the monthly payment that you're going to have. Sometimes, though, because of the type of financing and the credit that we have to work with, it will put us at a disadvantage in certain cases when it comes to making offers if we are using FHA financing. Now, this isn't the case if we're looking at a house that's been on the market for a week or a house that has multiple FHA offers. And that's not always the case. We don't always have crappy agents like that will pretty much use our offer to fish for better ones. Sometimes agents will just take the best offer off the top, and then it doesn't matter to them what the difference is between that financing. But for the most part, that is something that I have come across, especially recently, where I'm making really good, solid offers with my clients, and then a conventional offer will get beat out. What I would say is, if you're hovering right around that 700 credit score, it's going to be kind of we're going to be teeter-tottering before what option would work better for you. If we're in the mid 600s, absolutely FHA is going to have to be the option to go with, just because that's going to give you the lowest possible monthly payment. You're going to get penalized big time for using conventional financing, higher PMI rate, and higher interest rate. And then also your debt to income ratio requirements are going to be lower too, so you're going to qualify for less house. On the flip side, if you're hovering around 750 credit score, it's going to be better for you to use conventional financing. Yeah, your payment might end up being $50-$60 more per month, but it will be worth it. It will make your offer stand out more, just because I know sellers are going to be a little bit more likely to accept a conventional offer than FHA. At the end of the day, we're going to do the best that we can when you're working with me to get your offer accepted. My job is to put you in the best position possible to get your offer accepted. But sometimes there's certain things that are outside of our control that, is what ended up happening with my buyer, unfortunately. But hopefully this video helps you out if you've been, thinking about purchasing a home, and we went through the monthly payments, and you're kind of basing this decision based off of what your potential monthly payments would be. Use that $300,000 price point that I just kind of went over. Remember, every 20 grand we go up and down is about $100 per month on your monthly, monthly payment. Okay. Anyways, guys, stay cool out there. It got warm. Like I said, I think that nice cool weather only lasted like 2 days, and now it's done. And I hope you guys have a great weekend. Take care, and I'll talk to you soon.